Now, it's less than a week until the UK gets a new Prime Minister. Boris Johnson, the favourite to succeed Theresa May, says a US trade deal won't be reached soon after Brexit. He says discussions will be tough and robust. The results of the Conservative leadership contest will be announced next Tuesday. We're back with Geraldine Sundstrom from Pimco and Bob Michele from JPMorgan Asset Management, both still with us. Guys, we're seeing the pound rise today, and that's largely on comments from Michel Barnier on the EU side, talking about perhaps some negotiation around the Irish border. We had more concerning comments from Jeremy Hunt and Boris Johnson a few days ago around that backstop. Is the pound in any way attractive right now, or any UK assets, Bob?
I don't think the pound is attractive here. I think the rhetoric about the backstop will escalate, and certainly Boris Johnson will use the threat of a hard Brexit to try and negotiate a better position. I think the pound has difficulty in that environment. What's more interesting to us are gilts and the sea change comment by Carney, which tells us that there is a sea change in thinking. And as Brexit and the tensions around Brexit create economic headwinds, he's willing to respond with more monetary accommodation.
I'm so glad you brought up those comments from Carney. Can I get your take on those as well, Geraldine, and ask whether that makes you long gilts, particularly on the longer end?
We have a much more neutral approach on this. We still think that at the end of the day, the probability that's overwhelming is that the Brexit is still going to be benign, but a lot of possibilities, including potentially new elections on the cards. So where we focus is where we see, excess risk premium, and we see this one actually in credit, especially financials in the UK. We can stress test those balance sheets. They seem to be doing relatively well, even in the case of a hard Brexit, and therefore we'd like to earn that premium in the sort of financial UK spreads.
Bob Michele, if we get the quicksand of your JPMorgan call on low rates, what does that do to commercial incentives within the United Kingdom? What does it do to commercial banking? What does it do to trying to peg some form of, 90-day LIBOR, 3-month LIBOR, et cetera? I mean, what does your call do in the United Kingdom to the doing of business day to day?
So first of all, I don't want to take credit for Jan Lois's call on quicksand.
I get that.
Attribute that to him. Yeah. I'm sure I'll get an email from him.
Yeah.
But
so
in terms of the central banks going back to a rate cutting cycle, it is true. The banks are already warning us that net interest income, net interest margins could be under pressure again. I think Geraldine's right. I think the banks have gone through a decade of rebuilding their capital buffers. They should be able to withstand that to some extent. If rates get too low, you'll need some help from the central banks, maybe with tiering. So we're not all that concerned at this point.